Freelancing offers great flexibility, but it also comes with added responsibilities, especially when it comes to taxes. Unlike traditional employees, freelancers don't have taxes automatically withheld from their paychecks, so it's important to understand your tax obligations. Here are the top 10 things you should know about filing taxes as a freelancer in the US to avoid surprises and ensure you're maximizing your deductions. 1. Freelancers are considered self-employed. As a freelancer, you are considered self-employed by the IRS, meaning you're responsible for paying both income and self-employment taxes. Self-employment taxes cover Social Security and Medicare, and as of 2025, the self-employment tax rate is 15.3%. This is higher than the 7.65% typically paid by employees since freelancers are responsible for both the employee and employer portion. 2. Estimated quarterly taxes are required. Freelancers must pay estimated quarterly taxes to the IRS to cover their income and self-employment taxes. These payments are due 4 times a year, usually in April, June, September, and January of the following year. Not paying these quarterly installments can result in penalties and interest, so it's important to estimate your income accurately and make timely payments. 3. Keep track of all business expenses. One of the biggest benefits of being a freelancer is the ability to deduct business-related expenses. These can include things like home office space, software subscriptions, marketing expenses, office supplies, and travel costs. Keeping accurate records of your expenses throughout the year will help reduce your taxable income and lower your overall tax liability. 4. The IRS requires detailed record keeping. To claim deductions and avoid issues with the IRS, you must keep detailed records of your income and expenses. This includes tracking invoices, receipts, bank statements, and contracts. Organize your records either manually or through accounting software to ensure you have everything you need when tax season comes around. 5. You may be eligible for the Qualified Business Income (QBI) deduction. As a freelancer, you may be eligible for the Qualified Business Income (QBI) deduction, which allows you to deduct up to 20% of your qualified business income. This deduction is available to sole proprietors, independent contractors, and other self-employed individuals. However, specific rules apply, so it's important to consult with a tax professional to ensure you qualify. 6. Don't forget about the deduction for health insurance. If you're self-employed, you can deduct the cost of health insurance premiums for yourself, your spouse, and dependents. This deduction applies even if you don't itemize your deductions and can be claimed directly on your tax return. It also covers other types of insurance, such as dental and long-term care insurance, as long as you are not eligible for health coverage through another job or your spouse's employer. 7. Pay attention to the 1099 forms. As a freelancer, you'll likely receive 1099 forms from clients who pay you $600 or more during the year. These forms report your income, and the IRS receives copies as well. Make sure to match the income reported on the 1099 forms with your own records, and report it accurately on your tax return. Keep in mind that even if you don't receive a 1099, you're still responsible for reporting all of your freelance income. 8. Self-employment tax deduction. While you have to pay self-employment tax, you can deduct half of your self-employment tax from your taxable income. This is a above-the-line deduction, meaning you can claim it even if you don't itemize your deductions. This helps reduce your adjusted gross income, AGI, and lowers your overall tax liability. 9. Consider hiring a tax professional. Filing taxes as a freelancer can be more complex than filing as an employee. With different deductions, quarterly payments, and potential tax credits, you might find it beneficial to hire a tax professional or accountant to help with your tax filing. They can ensure you're taking advantage of every possible deduction and avoid common mistakes that could trigger audits. 10. Keep your tax deadlines in mind. Freelancers have different deadlines than traditional employees. In addition to quarterly estimated tax payments, your annual tax return is typically due on April 15th unless extended. If you're unsure about your deadlines, mark them on a calendar or set reminders so you don't miss any critical dates. Filing late could result in penalties or interest, so staying organized is key. Filing taxes as a freelancer comes with unique challenges, but with the right preparation and knowledge, you can navigate the process smoothly. From understanding self-employment taxes to maximizing your deductions, being proactive in keeping track of income and expenses is crucial for reducing your tax liability. Consider consulting with a tax professional to ensure you're making the most of your freelance career while staying compliant with IRS regulations.